3rd. Well, usually we do this coffee with Markus on Wednesdays, but today something really special happened in the market. So I want to tell you of what's happening, my outlook on it, and what you can do. So today is also very special because for the first time ever, I'm streaming at the same time to YouTube and Facebook. So I hope that this works, that you can actually see me on YouTube and on Facebook. Let me just see if the team is giving me the heads up that I'm there. Perfect. Okay. Junior said a bell rang and Markus appeared. Hey, I want to jump right in and show you of what's happening, what's going on here. So right now, the market's just closed 30 seconds ago, and the Dow is down another almost 3%. So it's down 790 points, as you can see here. So this is insane, especially since today the Fed cut interest rates. So what does it mean? Usually there's an inverse correlation. Let me come back to you full screen, and then we go actually back to the charts. So usually there's an inverse correlation between interest rates and the stock market. So here's how it works. Lower interest rates are usually good for the stock market. So it means that when the Fed is lowering interest rates, we should see stocks soaring. And here's why. You see, if the interest rates are high, let's think back into the 80s. Who remembers in the 80s when interest rates were 8-9%, right? I mean, remember that? Anyhow, back in the days, then of course you have your money in interest rates because it's producing a lot of money. I mean, 9-10%, maybe 11%, that's pretty good. Now, when interest rates are low, this is when investors are looking for another way to make money. So obviously, they're looking at the stock market. So this morning, there was the emergency cut from the Fed, who was lowering the interest rates by 0.5%. And yet, and let me come back here to the charts, this is what happened. The Dow was tanking. Let's actually take a look here at an intraday chart and see pretty much play by play what happened here. So this is where we opened this morning. So when we opened this morning, actually, we were slightly up. The Dow was sliding, and then when you see this huge big spike here, this is when the announcement came that the Fed was lowering interest rates. But what happened? The markets were selling off. And why is this? So was it a smart move from the Fed to lower interest rates, or was this actually not the smartest move? So I want to say a dumb move. Probably they're smart people. So a little bit behind the scenes, here's what happened. Yesterday, the bank, let me come back to you full screen, and then we come back to the charts. But this way, it's a bit better to talk this way. So yesterday, the Bank of Australia lowered interest rates to the lowest level ever. Bank of Australia lowered interest rates to 0.5%. Now, Bank of Australia, they actually have it down. Australia hasn't had a recession in what? In 29 years. So this is where last night President Trump at 1 a.m. in the morning or 2 a.m. in the morning started tweeting and started putting pressure on the Fed and say, look at this, Bank of Australia is lowering interest rates, but our Fed is not taking any action. Well, here's the deal. Let me actually go over here to the Fed Fund tool. I want to show you a really cool tool that actually shows you what market participants are expecting. So it is the CME Group Fed Watch. This tool shows you what the market participants are expecting. So in 2 weeks from now, tomorrow in 2 weeks, we have the next Fed meeting. And here is what market participants were expecting already. Market participants were expecting, as you can see, a 100% probability of the Fed's cutting rates in 2 weeks from now, right? So, and this was factored into the markets. And this is why this morning markets were, slightly down because, of course, we have the coronavirus scare going on. I mean, we have more and more confirmed cases now in the United States, in Europe. I mean, pretty much all over the world. So this is where right now the first companies are actually reporting that, yes, it does have an impact on them. I mean, Apple started 2 weeks ago because Foxconn, their biggest supplier is in China. And Foxconn actually said yesterday or this morning that they expect to be up and running by the end of March. End of March? I'm recording this here, or right now we are live on March 3rd. So, wow, this will definitely hurt Apple. And I mean, if you just look also at the airlines right now, everybody is concerned. Companies are restricting travel. So let's take a look here actually at some stocks together. And then we go back to the Fed decision and whether this was smart and what to expect over the next few weeks. So let's take a look here at United Airlines. So United Airlines today down 4.85%. Why? I mean, right now, really, you can buy tickets next to nothing because the planes are empty. Here in Austin, I live in Austin, Texas, as you know, we have here in a couple of weeks South by Southwest, a big conference and festival coming into town. And yesterday, already Facebook and Twitter announced that they will not participate, that they will not come. Now, South by Southwest, the organizer said, we are still on, but hey, who knows? They might actually cancel the festival because there are more and more conferences that have been canceled. Facebook has been canceling conferences. Mobile technology conference has been canceled. So there's a lot going on. So not a whole lot of travel. So here there's United Airlines. American Airlines, probably the same. Yeah, look at this. Even hit worse, down 5.36%. Let's see how Southwest is doing. Or Delta. Let's actually check Delta. Let's see what's going on there. Delta, well, down 1.88%, but is that the airline? No, it's Delta Industrial. Okay, sorry. Delta, let's see, Delta Airlines. What's the symbol? See if we can quickly look it up. Delta Airlines, DAL. There we go. I was wondering. Okay, today, well, only down 2%. But this is what's happening. So here's the deal. If you take a look at the bigger picture right now, the economic impact of the coronavirus is unknown. We don't know yet how much it will affect us. We just started. I mean, the first cases were discovered in the US here, like a week or 2 weeks ago? So it will take us probably a few more weeks until we know how severe this really is, how much this will be impacting the economy. Now, today, this morning, traders, and I'm switching back here to an intraday chart so that you can see it. This morning, traders said, yeah, it's pretty bad, but think about it. Last week, we came out of the worst week since 2008. I mean, this definitely was crazy, right? So let's go back here to the daily chart for just a second. So here, this is what happened last week. I mean, markets were just crashing in free fall. But then yesterday, on Monday, March 2nd, this is when the markets already rallied, right? Because this is where everybody was hoping that worldwide there will be some sort of stimulus. And this is when traders did factor in this interest rate increase. Now, the Fed did it this morning. And so what are they going to do in 2 weeks from now? Well, probably nothing because they just did it. Now, market participants still expect that they will continue to lower the interest rate. Here's the scary thing. See, this is where we are right now. And I always said it, a market is falling twice as fast as it goes up. Even interest rates are falling twice as fast as they have been going up. Do you see this? So the last time we had a rate as low as we have right now was in 2017, so 3 years ago almost. So, I mean, right now we're already at 1%. How much lower do you want to go? And here's the interesting thing. It's actually not the Fed's responsibility to make sure that the stock market is going up. See, I highlighted it here, and this is directly from the Fed's website. By law, the Federal Reserve conducts monetary policy to achieve its macroeconomic objective of maximum employment and stable prices. So they need to keep the inflation in check. Now, usually the FOMC, as you can see here, conducts a policy by adjusting the level of short-term interest rates in response to changes of the economic outlook. What economic outlook? We don't have it yet. So here's the deal. And then we dive in a little bit deeper into this, but just big picture. I believe the worst is yet to come because with today, you need to keep some powder dry. I mean, I think the Fed today reacted too early to what's going on. Yes, they do. Let's go back to this here. They do need to react, or this is their job to react to the economic outlook. But the economic outlook is unknown. And think about it right now. What else is going on? We have more and more companies who are telling their employees to work from home, right? So what does this mean? If you're working from home, you're not burning any gas. So this is why, let's take a look at oil prices here. This is why over the past few days, I'm here on daily charts, see oil prices have been crashing down. Now, yesterday, since OPEC announced yesterday that they will cut production not only by 600,000 barrels a day, but by 1,000,000 barrels a day. This is why yesterday crude oil had a quick rebound. But it's simple, supply and demand. If people are staying home, if people are not traveling as much, right? If people are not burning gas, then obviously, and this is worldwide, right? Production, as you know, in China, there's a lot of production still shut down. We will feel the effects. I mean, we just talked about Apple. I mean, we can take a look at Apple here. So Apple, of course, yesterday, yay, when Foxconn said, we will resume production. And then today they said, well, in 4 weeks from now. So I think they have some emergency production going on. But hey, boy, this, I believe, will be ugly. So this is why I wanted to come to you live today. Wanted also to test it out, actually, if it is possible for me to go live on Facebook and on YouTube at the same time. And most importantly, I can see your comments. So do me a favor right now before we continue, because I want to spend a few more minutes with you, tell you a little bit more about what I think and what is the right thing to do right now. But if you can see me either on Facebook or on YouTube, on Facebook, hit like, give me a thumbs up. On YouTube, thumbs up, right? And if you are on YouTube, make sure that you're subscribing to my channel, because this way you're getting notifications whenever I'm going live. I mean, somebody said it here in the very beginning. Boop, there was a notification, and you click on it on the phone, and here I am. Anyhow, so Connie says, hello on Facebook. Michael said, coming through great on Facebook. Okay, that is fantastic. I see much more comments here right now on YouTube. So if you're watching this on Facebook, you're slacking a little bit. The YouTubers seem to be a little bit more active. Okay. Anyhow. Okay. So what do you do here right now? This is the question, right? I mean, first of all, you know me. For now more than a year, almost a year and a half, I have been saying the next crash is coming, because we know this. These crashes are healthy. Stocks can't go up forever. Let's actually switch here to a weekly chart, or maybe even a monthly chart, so that you see how we are doing over time. So here we are looking at a weekly chart. Actually, so let me switch to a monthly chart of the Dow Jones. So a monthly chart of the Dow Jones, this is where you see, yes, absolutely. We do go up, and then there will be a time when we are going down, when we have a correction. That is healthy. Warren Buffett said it recently. He doesn't want to buy anything because everything is just overpriced, and that is so true. So every now and then to have a correction is healthy for the markets. We should have a correction. So right now, I mean, this, honestly, what we are seeing here right now is nothing yet. I believe the worst is yet to come. Now, here are the great things. When you are a trader, you know how to take advantage of a rising and a falling market. Now, make no mistake, right now, when markets are crazy, let's take a look actually. Let's go back to an intraday chart, and let's just see what's happening within 1 day. So within 1 day, I just want to show you really quickly here. Let me just move something out of the way that I can show you this stuff. But so today we already know the Dow is down almost 3%. But if you look at what happened intraday, we actually went from, let me go here. Okay, price range. Let me just mark this here on the charts. Look at this. We had a 5% move today from the high, when actually the Fed announced that they will lower interest rates, and everybody at first was, yay! And then they realized, oh, shoot, way too early. Way too early. So we had a 5% swing today. Yesterday, I think it was even worse. Let's go back and let's take a look at yesterday. We actually have to look at the overnight session yesterday, so I'm going to switch to a slightly different time frame. So yesterday, during the overnight session, see, first we moved down 2%, and then to the highs actually here, we moved up. Where does it show me my percentages? Right here. Look at this, 7%, a 7% move yesterday. Now, these moves are crazy. In fact, they're so crazy. By the way, did you hear it yesterday? Robinhood, right? The favorite stock trading app of millennials was down. Look at this. I found this here in one of the forums. I wonder if I can go. Yeah. See, yesterday, people said, trying to close out my trades in Robinhood so they can stop robbing me for the months. And they shut down again. This from today, 5 hours ago. So, frustrated with Robinhood right now. They shut down. You couldn't actually close any trades. You couldn't log in. So, for the second day in a row, down goes Robinhood. And, I mean, if you've been following me for a while, I've been telling you, I don't like Robinhood. I mean, I just see too many of these horror stories. See, gosh, Robinhood appears to be down on my end. Anybody else is having issues. And this is what just has been going on. It has been crazy. Now, the brokers that I personally like to use is Thinkorswim, TD Ameritrade, or Interactive Brokers. And they did not have any issues. I mean, pretty much all mainstream brokers did not have any issues. So, I mean, Robinhood, first of all, kudos to them for stirring up the industry and basically starting the fight for zero commission. So, good for them. Other than this, it seems that the brokerage and the app have lots of problems. And again, right now, the official explanation is that there was a technical problem, right, that caused it. I don't know, was it a technical problem or did they have to shut it down for whatever other reason? We don't know. I know that there will be an investigation. I mean, the SEC and CFTC, these authorities don't take this lightly. Anyhow, so let me remove this here. We go back to the Dow Jones, go back to a daily chart. There we go. So that we see a little bit more of what's happening here. So I know that today was the G7 meeting, and at the G7 meeting, actually, it was quite interesting that most of the countries said, okay, you know what? Yes, we acknowledge that the coronavirus will have an impact on the economy, and we don't know yet what it is. And I think, honestly, this would have been a smart move. So right now, with the Fed who have already lowered interest rates, I mean, what do they want to do next? Yes, they can lower it a few more times. So as you see, we're still at around 1%, 1.5%. But oh boy, it will be tough, especially if in 2 weeks from now they have the Fed meeting and they said, oh, you know what? We're not going to do anything because we just did it 2 weeks ago. No, I mean, this obviously won't fly. So we'll see. I haven't seen any reaction from President Trump today if he said, well, this was a good move, or if he said, well, you need to do more, you need to do more. I'm just surprised that the Fed lowered it this morning. For me personally, looking at the chart and what I saw here this morning, there was no reason. After we had the bounce back, honestly, I would have expected today, without the Fed intervention, I would have expected a volatile day going up and down, but pretty much within reason, not within a 5% swing here again. So I wouldn't be surprised if over the next few days we're actually taking out the lows that have been established here over the past few days and that things are getting worse. Okay, let me take a look at the comments here, answer a few of your questions before we go back. And hey, you all already know my mantra, always trade what you see, not what you think. So that's what we do. We follow what we see on the chart. Oh, by the way, again, before I look at some comments here, you know that I like to use indicators to determine the direction of the market. I like to use RSI, stochastics, and also the MACD. And right now, all three indicators are indicating that it's more likely for the market to go down. So keep that in mind. Okay, so great. See all the questions here. This was actually Junior's comment earlier. A bell rang and Markus appeared. Yes, and here I am. Okay, good. Yeah, Junior said, I remember this was back in the day, 16% interest rates. Junior, when was it? In the 80s, right? Late 80s when we had 16%. You see, this is why there's this inverse correlation between interest rates and the stock market. If you can get 16% fixed on just on a savings account, why would you be in the stock market where you have fluctuations? I mean, admit it, last year was great. S&P made 39%, but hey, this year doesn't look too good thus far. I mean, let me just mark it so that you see where did we have the beginning of the year. So I'm drawing a vertical line right here. So this here, right here, was the beginning of January. And right now, we're down for the year. We are clearly down. Anyhow. So let me come back here, take a few more look at your comments and questions if you have any. And yeah, so Sean said, too early in response to the Fed. I believe so too. Too early. Too early. Okay. Yeah, Bill says, anybody remember the highest average 6-year month CD rate was 15.79%. Absolutely. Absolutely. Okay. Hey, Michael is just telling me, coming through on Facebook, yay! Again, today is a little bit of an experiment because going forward, you know that we have our Coffee with Markus usually on Wednesdays. Right now, you're watching this on a Tuesday because we did have the emergency rate cut today, and I believe it was way too early. I think that the stock market over the next few days will react very badly to this, and the worst is yet to come. This is what everybody's saying regarding the coronavirus. Oh, by the way, before I go to more questions, so let's take a look at some stocks that soared today, that went up like crazy. I just want to get rid of this this line here. So let me actually show you a stock that was soaring today. INO. So INO, if you take a look at this, they were up. What? 69%. Why is INO up? Because the headlines was that INO shares rally after biotech says human trials of coronavirus vaccine will start in April. Wait, April. So right now, yes, there is. I saw it yesterday at the American Medical Association. So I don't believe in any of the mainstream media. I like to go to reliable, reputable resource. So the American Medical Association said that right now there's 111 trials on their way. And they said that, yes, there are 2 companies that are getting close to human trials. One of the companies is Gilead here in the United States, and but they are still weeks away. The other one, as of yesterday, was in China. And, well, we know about China, they don't necessarily care too much about their people. So they just start testing, it'll be fine. So here in the United States, of course, it is way more regulated. Today, a third company, this is INO, joined them and said, yes, we are getting close to be able to do human trials, but we are talking about April. That is 4 weeks from now. So that's why I said the worst is yet to come. Okay. Anyhow, so see, everybody is saying that I'm coming through on Facebook and on YouTube. That is great. John agrees. It's not over yet. The Fed moved too soon. And you see, this is a problem. And this is why today stocks were plunging down. Now, by the way, let's take a look at some other things. So we have gold right here. Gold, a few days ago, made an not an all-time high, but a 7-year high, attacking the 1700 level. Right now, you see the flight to safe haven hasn't even started yet. Now, talking about safe haven, you know that sometimes they said cryptocurrencies will be the safe haven. Well, apparently not Bitcoin. I'm monitoring Bitcoin here a little bit. And you see, here's what happened. As we did have the sell-off last week, Bitcoin was also going down. Surprise, surprise, right? So this is what has been going on. What's going on with the currencies here? The euro versus the dollar. I mean, right now, the euro, is it on the daily chart? Yeah. The euro is soaring against the dollar. Why? Because with lower interest rates, the dollar is being weakened, right? Now, a weak dollar is good for our export industry. So American companies, it's easier for them to export when we have a weaker dollar. And of course, it's not nice when you go somewhere on vacation, but hey, right now, Who really wants to go on vacation as this coronavirus scare is going all around? Okay, I see that most of you are with me that the Fed are acted way too early and that it can get ugly. I mean, John said here, yes, it ain't gonna be pretty. Absolutely. Okay, so Christian is asking a great question. Christian is asking, do you think the gap up near the top of the S will fill before another move down? Let's take a look at this. This is a really good question because you see, we do have a gap right up here. And yes, usually markets like to fill the gap. Honestly, I do not think that we'll go up there. I honestly believe that this was a retracement. You see, for those of you who believe in Fibonacci retracement, let me see if I can use this tool here. I haven't checked the Fibonacci retracement, but I'm pretty sure that what we are seeing here is right at some sort of Fibonacci level. Look at this. Sure enough. Okay, so the most recent move, if you look at the Fibonacci level, we were stopped right here and now moved back right to the next Fibonacci level. Now, for me personally, Fibonacci is a little bit too complicated, so I like to look at my indicators that you see at the bottom of the chart here. Let me remove Christian's comments here for a moment. I like to look at RSI, stochastics, and MACD. They're telling me the same story, and they're telling me right now we are still going down. So we'll see. And again, this is what indicators do, and even Fibonacci, it tells you what the market is more likely to do. We never know what the market is doing, but as a trader, we want to act on what is more likely to do. But great question today, Christian here. Great question. So Don is asking, how far do you think the Dow will fall? That is hard to say. Honestly, I personally think that a 20% correction would be very reasonable. Now, if you think about it, a 20% correction based on the Dow that has been at around 30,000. So this means that we can actually fall easily around to 24,000. I honestly think that this would probably be healthy for the market to attack this level 24,500, maybe even 24,000. And right now, as you can see, we're close to 26,000. So this means that we have another 8% to go down, might be even more, might be another 10, 15% from here. All right. So just looking at a few questions here. Okay, so somebody said that President Trump said the Fed should have done more to lower rates. Really? I think we all agree here who are watching this right now, based on your stream, based on your comments, that the Fed reacted too early. By the way, if you're watching the recording of this, because I will leave it up as a recording, and here's why. 2 weeks ago, I released a video about what the coronavirus can do to the market. 2 weeks ago, I said we will see a huge correction. So this is why I'm leaving this this video up here, because mark my words, we will see a larger correction here. So yeah, President Trump thinks the Fed should have done more. I don't think so. Anyhow, if you're watching the replay, let me know in the comments, what do you think? Did the Fed act too early, or was this the right move? I think they acted too early. Okay, John said panic has set in. Mike said also Trump once more. He tweeted out early. Hey, by the way, today is also Super Tuesday, right? Super Tuesday mean that we will know more about the Democratic candidates and who is most likely to run against President Trump later this year. Well, that's another thing that's going on. So we'll see. Okay. Basim says, looking forward to tonight's binary options. Yes, in a few hours we have our class again with binary options. We'll talk about the trade that we put on yesterday. We'll look at the new trades and we will put on trades, because right now this is fun. When we catch the move on the right direction, you know it from yesterday. We have put on a trade where we're risking, what, a little bit over $100, maybe $110, trying to make more than $800. Okay, anyhow, so this is fun. And tonight in the class, I'll show you how all of this turned out. Okay, Mitch is asking, what do you think the level is for buyers to come back in? So Mitch, again, I'm a technical trader because trade what you see, not what you think. Let's have a coffee together, right? So I would really like to see that the market has found a bottom. I personally would like to see that these indicators are turning around. I would like to see that actually the RSI is going above 50 again. I want to see that the stochastics is going above 50 again, and that the MACD here is going above its moving average. So does this mean, will I be able to predict the bottom? No, I don't think anybody is. I mean, Paul Tudor Jones, who is a famous trader for picking bottoms, in an interview once said, yeah, I'm famous for picking bottoms because I try 12 to 15 times until I finally got it right. So you see, for me personally, I would start buying once we see clearly that we have found a bottom and that we are now back into an uptrend. So does this mean I'm leaving some money on the table? Yeah, but I mean, think about all these guys who bought yesterday. I mean, they're not happy campers today. So yeah, you don't want to buy too early, because in the markets we often see the moves that you see here where we go back there, where we are going down, bounce a little bit back. That's what they call a dead cat bouncing, and then attack at least the lows again, or maybe even go higher, go lower here. So we'll see. We'll see. No, Amit has a good point here, saying that RSI goes up and down frequently. How to overcome this whipsaw? Well, this is why, I mean, you don't want to rely on only one indicator. I personally like to use 3 indicators. So the RSI is only one, because you're right. The RSI, if you only rely on one indicator, it might give you false signals. There is no best indicator, but based on my experience, what is best if you have a combination of indicators. So you want to have a second indicator confirming what you see on the RSI. That's why I would personally like to use stochastics to confirm what I see on the RSI. And then I even want to have a third indicator confirming what these two are doing, and that's the MACD. So that's how I personally like to trade. That is the PowerX strategy. By the way, if you're interested in it, I've written a book. So I just grabbed behind me. Let me just come back to you here on a full screen. I've written this book, The PowerX Strategy, and you can actually have it for free if you want to. All I ask is pay for shipping and handling. If my team could somehow post in the chat, we have a landing page where you can get it. So in this book, I explain this strategy in detail. So the book, usually if you go to Amazon.com, you'll see that the book sells for $24.95. So it's a really nice book. You see that there's plenty of charts in there explaining everything. So usually $24.95. If you don't have it yet, team, if you could post a link both on Facebook and also on YouTube where people can get the book. All I ask, you can get it for free, is that you cover shipping and handling. And I'm not quite sure. I believe shipping and handling is $9.95. Could be a little bit cheaper. Anyhow, be happy to send you one of these books. We should get a new batch of books. We just ordered, I believe, 1,000 books. So I'll be happy to ship them out to you. So if you're interested in this and learning more about the indicators and the strategy that I use, PowerX strategy, we should set up a website that says powerxstrategy.com. Anyhow, the team will post a link for you here in just a moment. Okay, let's see what other comments we have. John says, I cannot trade without Fibonacci. Well, I cannot trade with Fibonacci, John. So, and again, you see, every trader is different. And I think that's great, right? Because we all have different methods. All we need, that's what we actually want to do. We want to make sure that we can find a method that makes it easy for us to identify whether the mark is going up, down, or sideways. And for me, this is the 3 indicators here. Okay, good. So, if the team can post the link here, and we'll post it in the description here. So if you want to get the book, all I ask is cover shipping and handling. So we have to mail it to you. We have to put it in a nice box, right? Or in an envelope. Don't know exactly what the team does there, and then get it out to you, but you can have it. Okay, so Rabbit 1 is asking an excellent question. What industries will lead us out of the downtrend? I don't know. I really don't know. Here's what will happen. The first industry that right now is affected, or the first industries, is the travel industry, obviously, right? Because people are traveling less. And also right now, the manufacturers, right? Because there's a lot of manufacturing going on in China, and everybody's waiting for supplies from China. So I don't know if I'm just looking around my desk here, and if I'm looking at my iPhone, right? I mean, most of the components in there manufactured in China. I'm coming to you here from a MacBook Pro. Most of the components manufactured in China. I'm having next to me an iPad, one of the iPad Pro, probably manufactured in China. The camera right now probably manufactured, or at least major components manufactured in China. So I don't know. Right now, I just think that for most of the industries, we haven't seen the effects yet, because companies are keeping a lid on it. Some of them have already said, you know what, next quarter will not be easy. Next quarter might actually be ugly. But they haven't said how ugly it will be. So next quarter, when they're releasing the company earnings of this quarter, the numbers, then we will see how bad it gets. So anyhow, good question. So let's see. And Mitch actually says to earlier, where we said, okay, how far can we go? You say 23,400? Agree. I think that's a good number. Around 24,000, 23,400. That could be a good number for a healthy correction. Now, again, I would not blindly buy then. I would wait until I clearly see that the indicators are moving up again. And you see, on the charts, you can actually see it very, very nicely. After we have a dip, when is it over? Let me bring up the crosshairs here, because with crosshairs, it is a little bit easier. See, all you need to do is look for the RSI, look for the stochastics. At this point, after it dips down and then dips back up, it still could go down. So you see, if you patiently wait, you would get in right here. So this would have been at 27,850. And then you can ride it all the way up, and take a look at this. The indicators then tell you right here, it's time to get out. By the way, if you don't want to fiddle around with indicators, most of you already know it. I use a software called PowerX Optimizer. Let me just show it to you. So this software that makes it super easy for me to see what a stock is doing, and also finding the best stocks to trade. So here we can, for example, look at Apple here right now and see what do we have here right now. And you see it is still red, which means it is still in a downtrend. So this is the beautiful thing. You also see here, this is when Apple was in an uptrend. So this is when you want to be a buyer of a stock, and this is when you want to be a seller of a stock. Now, some of you who are watching this live cast here, you probably already have PowerX Optimizer, and here's the cool thing. You might have seen, if you have PowerX Optimizer, that yesterday and today, very few stocks came up on the scanner. Today it was Z, I remember it. Yesterday it was a weird symbol. Can remember, today it was Zillow. But here's the good news. This is how this software keeps you out of trouble, right? Because you don't want to get into the market right now. It is too early to buy, and I also think right now you should not be a seller, because if you're a seller and then suddenly you experience a huge move like we had yesterday, you get burned. So the best thing right now is what the software does. It tells you to stay on the sidelines. Don't be impatient. Let the craziness really shake out. And yes, you might hear about a few traders who say, oh, I'm making a lot of money, but trust me, right now you will hear about more traders that are losing money. I mean, the forums are full of it. Facebook groups are full of it. I mean, this is just crazy. What we see right now, how our accounts are being wiped out. So if you're a trader and right now you are flat, meaning that you're not in any positions, it is a good sign. Wait for the next opportunity. They will come along. All right, so let's see. And John says it, bottom picking can be dangerous. Absolutely. Yeah, I mean, try to catch a falling knife. if you don't catch it right, it can be difficult. So this is why, don't do it. I don't do it. I mean, I've been trading for forever. I placed my first trade when I was in high school, and I'm now 50 years old. I moved to the United States in 2002 to become a professional trader. That's when I quit my job. And this was, wow, now 18 years ago. So I've been doing this a long time, and I'm not trying to pick bottoms here. Okay, great. So we do have a link here. It's a rather lengthy link, so it's easier probably for you to click on it when you see it somewhere in the comments here. Okay, good. Okay, I know that we have been on for more than 40 minutes right now. I thought I'd just jump on for 15 or 20 minutes, tell you a little bit about what I think. But hey, since you're here and you have questions, then might as well talk a little bit. So if you're okay with it, I'm fine hanging out another 5 to 10 minutes to talk about some of your questions, because I see some great questions coming in here. So just having a sip of coffee. After all, it is called Coffee with Markus, right? So I hope that you're having your favorite beverage. So Jairo is asking a great question. So how do you protect the size of your targets on the trade? Great question. So let me actually go back to PowerX Optimizer. Here's what I like to do. I like to see a risk-reward ratio of at least 1 to 2. Meaning that if I'm having a stop loss, let's actually go to one of the trades that we did recently. So Dan here was one of the trades that we did recently. And this was a trade to the short side. So we actually entered here at 14.81. And then we're risking here 70 cents. So I want to make sure that I'm making at least $1.40. And the good news is I have kind of the software looking back over the past year to see how much did this stock move once it started moving, right? I mean, once we saw either an uptrend or a downtrend, how much is it moving? So here, the software said I can risk 70 cents. Let me actually make this a little bit bigger so that you can see it. So I can risk 70 cents trying to make $4.34. So this means that here I would place my stop loss at $15.51 because, again, this betting on a falling market here. Recently, it has been good to bet on a falling market, right? And that's what you need to know as a trader, how to trade a falling market. Anyhow, so we are taking a short position. So this means that we are placing a tight stop loss and then take profits as soon as we move down to $10.47. So right now we have ways to go, but I'm already taking profits on the way down. So we did have a profit target earlier. It was around 14. That's when we took profits. So that's an actual trade that we did. But great question here. Okay, so there's more questions. Okay, Amit is asking, what is your opinion about Renko and Heitkoetter? They're moving similar to range bars. You know what? Personally, when you're trading stocks and options, I like to trade on daily charts. That's what I like to do. I like to short-term swing trade stocks and options. So I like to hold a position between 5 and 20 days. That is my sweet spot. And when day trading, I prefer just range bars. But other than this, I would say keep it easy. Don't make it more complicated. You see, most traders lose money because they make trading too complicated. And when they make it too complicated, they don't understand it or they have fear of pulling the trigger. So, Amit, I recommend keep it easy. Do what works for you. I mean, somebody said it earlier. You can't trade without Fibonacci. Great. I cannot trade with Fibonacci. So whatever works for you, that's a great thing. There is no one way to make money in the markets. There is a lot of ways. You need to find a way that makes sense to you. So let's see. FX Warrior says, I just bought both of your books. Thank you very much. Appreciate it. We'll put them in the mail here as quickly as we can. So promise. And as soon as we put them in the mail, we do send you a tracking number. So this way you know when you can expect to arrive it. Right, team? We're doing this? We're sending tracking numbers, right? I believe we do. Okay. All right. TA says, sit back with popcorn and watch time. Right now, I absolutely agree. This is where Antonio says, very rightfully so, cash is a position. You can be long a market, meaning that you're betting on a rising market. You can be short, meaning that you're betting on a falling market, or you can be in cash sitting on your hands. And right now, for me personally, that is the way to be, because you will see over the next few days crazy swings in the market. Yesterday, the markets moved from the low to the high 7%, today 5%. I mean, this is where you're getting chopped into pieces if you're in this market, because your stop loss will be hit probably before your profit target. Only if you're lucky, first your profit target is hit and then your stop loss. So, I mean, this is where TA said it back. Sit back with popcorn and watch. All right. Good. Perfect. So, okay. Doug actually says, great question here. So, Doug, I assume that you are a PowerX user. That is great. So, he said, PowerX said to get into Z at 51.96, which we did. Did you get in? No, and here's why. You see, it is very important that when you look for the best trades to trade, so yes, that was today a signal, Zillow was a signal, but you want to make sure that you have a stock that is predictable, that makes predictable moves. Now look at Zillow here, look at Z. Does this stock make predictable move? You have a gap here, you have a gap here, you have a huge gap here, you had a massive run up and now a breakdown. So for me, this is not a predictable stock. This is why I've shown you. Stocks like GPRE. Let me just actually show you a few examples here. So here's a stock that has more predictable moves, GPRE. Yeah, let me show you. See, this actually has nice and predictable moves, going up and down and up and down. NVTA is another one that has predictable moves, going up and down very nicely here. PI is a stock that recently came up. These are much nicer moves. Can you see this? So, Doug, compare this to Zillow. So you want to make sure, do not blindly rely on just the software, any software. I mean, just use common sense, and you want to make sure that you don't see gaps and that you see nice and small trends. Whenever I see anything like this here is craziness, and I don't like to trade craziness. I like to trade markets that are normal, and right now we don't have normal markets. Anyhow, good. So, great questions here. Let me actually zoom out here again. And Doug, let's see. So, I did have another comment. Oscar said, I would like to have a coffee mug. Oscar, would you like to have this coffee mug? Trade what you see, not what you think. It's a good reminder. You see, it's this way. I'm right-handed, that I look at it all the time. So it's trade what you see, not what you think. Oscar, if you would like to have a coffee mug, we'll get you a coffee mug. Do me a favor. Send a quick email to nicole@rockwelltrading.com with your address, and we'll send you a coffee mug. Just for you asking nicely. Okay. All right. Fantastic. Good. Doug says, yes, thanks, Marcus. Gap is not your friend. No, the gap is not your friend. Definitely not. Okay. Hey, guys, it was fun hanging out with you. So we will be live at our regular time on Wednesdays at 4 o'clock Eastern, 3 o'clock Central Time, right when the market closed. I just did this emergency broadcast today because I think it is important that you know what is going on and that you know how you should handle the situation here right now. So this week, Coffee with Markus twice. So we will be back tomorrow with another Coffee with Markus. Make sure that you join us on Facebook and on YouTube, because it seems that right now it works that you can go live on Facebook and on YouTube the next time. So on YouTube, you can set reminders. I believe there's already a possibility. Make sure that you're hitting like and that you're subscribing to this channel here, because this way YouTube will notify and it will come up as a little pop-up. Same on Facebook. I mean, if you're watching this right now and we're not friends yet, so that you haven't liked this page, if you're on Facebook, like this page and enable notifications, because this way Facebook will let you know when I'm going live, so you don't miss the next episode. And I'm looking forward to talking to you again tomorrow. Take care.